everyone. Welcome to our third episode of Unboxed, where we take your mortgage questions out of the box and answer them. We're really excited to be here today.
Sorry I was gone last week. I was a little under the weather, but we're back to help everyone on whether they're just starting or wherever you are in the home buying process. We're here to kind of be your source for direction and how to achieve any goals that you may have.
So let's get right into our show today. We're going to start with some questions that were submitted ahead of time on our landing page. But we encourage you all to ask questions while we're live today and to share this content because we want everyone to be able to see it. There's going to be some awesome stuff today. So first off, we have a question from Ashley, and she asked, what is PMI?
It's a really good question. PMI is short for private mortgage insurance, and what that is a lot of people think that when you buy a home you need to have 20% down. At one point in time that was correct, but because of private mortgage insurance, it allows you to put down a much smaller down payment, whether it can be 3 to 5 or in cases there's no money down, depending on the circumstances. Basically what that does is it helps the lender get rid of some risk, which allows us to be okay with those smaller down payments. It really has made owning a home much easier than 30 or 40 years ago.
And how do you get rid of PMI then, or when does it fall off?
Sure. Again, it all kind of depends on your particular situation, but the easiest one is a 20% down payment. If you're short of that, once you pay off 20% of the home's value on a conventional mortgage, then it just automatically, it's actually a law, it goes away on its own.
That's good. And then we have another question from Brent, who said, how fast can I get through the process?
So every company is a little bit different. We go, we're Expedite Home Loans for a reason. We're built around getting you to the closing table as quickly as we possibly can. And again, every transaction is different. Everyone's got their unique scenarios, but typically 3 weeks, give or take, 30 days, I'd say conservatively, but it's really not a super long process, especially if you work with us to get things that we may need or whatever the situation may be.
What are some tips you would give to someone to make the process go faster?
Not financing things, like you don't want to go out and get a car loan, things like that. We'll always need paperwork, whether it's taxes or whatever we may need. Getting those things back to us quickly, that helps. Apart from that, a lot of it is third party requirements, like whether it's an appraisal or whatever, and we work really hard to work with the best people in the industry so that we don't have hang-ups on that side. But the big thing is working with a company that values getting things done quickly on your behalf.
For sure. What can slow down the process?
Like I said, financing things. Your approval is based on your credit report, and if you are adding new things or changing things or removing things or whatever it may be, we'll have to update all of your information, whether it's a credit report or whatever. Changing jobs, things like that. I mean, it's kind of common sense stuff. We're approving your loan based on your current financial situation, so anything that alters that, will kind of throw a wrench into things sometimes.
Gotcha. That makes sense. So we have another question from Jason, and he said, I have $100,000 cash, and I want to buy multiple rental properties. What are the possibilities?
It really depends on what you're trying to buy. Rental properties, for the most part, require 20% down. So, I mean, if you were buying $100,000 homes, you could buy 5 with $100,000, each with a $20,000 down payment. But it really, you'd want to talk to a person, one of our home loan consultants, about your unique situation, because it's really not that simple to have like a one-size-fits-all answer.
Yeah. Once again, I just want to remind everyone who's on to share the video, throw up some likes or smiley faces or hearts, whatever you like hearing, we want to hear and we want to know what you like. So We have another question from Brenda, and she asked, do you finance manufactured homes?
Yeah, we do. FHA allows us to finance homes that are, another common name is or mobile homes. They have to be fixed to a permanent foundation, and the title that comes from the BMV when the house is built needs to be retired, and it actually needs to become real estate. We can assist with that whole process. It'll be done with a local title company wherever your future home is located. But it's definitely something we can do. We actually do a decent number of them. It's except for that unique piece, it's really no different than buying like a regular traditionally built home.
All right. And Joan asked, what paperwork do I need for a mortgage? I think that's a question that is on a lot of people's minds.
Yeah, that's a good one. A lot of our, the traditional borrower needs tax returns, pay stubs, bank statements. Again, we're trying to paint a total picture of your financial situation. So, if you have kind of a unique situation, like for example, if you pay child support, or if you receive benefits from a trust, or retirement income or things like that, we just have to be able to document all of that so we can, like I said, when your file goes to an underwriter, that complete picture from top to bottom is laid out, so that no one has to do any guessing. It's kind of the easy way to state it. But again, our team of home loan consultants, they're great at getting ready to be pretty quickly, and it's usually simpler than people think that it might be.
Welcome, Dustin. Thanks for joining us today. We're really excited that you came. I heard you throw out a word there that I don't know if everyone knows what it means. Underwriter. What does an underwriter do?
Sure. We have people called underwriters, and what they do is they look at your file, whether it's the paperwork you provide to us, the terms of your loan, the home that you're actually buying or refinancing. They kind of look at everything, and I keep saying that, total picture of your situation, and then they compare it to the guidelines that we need to follow in order to actually approve and close your loan, and they're kind of the final say on if we meet those requirements, and if we're short in a certain area, they ask, provide this piece of documentation for this situation, or whatever the situation may be. But they're ultimately who signs off on your loan before we can go to closing.
Perfect.
Hi, Dan.
So you just got on. Hi. All right, we have another question from Monica, and she asked, should I pay off my mortgage early?
Sure. I hate to keep saying this, but again, it kind of just depends on your financial situation. Obviously, if you pay your loan off quickly, you'll save money and interest, but it kind of just depends on what other debts you may have. Traditionally, mortgages, from an interest rate standpoint, are cheaper than, say, credit cards or auto loans or whatever else. If you have a mortgage with an interest rate, from 3 to 5%, that money that you're borrowing is much less expensive than, say, a credit card with a 18% interest rate. So typically the advice I give is, if you have any high interest debt, so like I said, a credit card or any kind of a hard money personal loan or anything like that, that's typically where you want to start, because one, there's not typically any equity there that you're building, and then two, that even though it might seem like a big payment, the actual interest you're paying on your mortgage as a percentage is much smaller than a lot of other consumer debt that people have.
Are there penalties for paying your mortgage early?
Not with us. I'm sure there are places out there that may, but none of the options that we have any kind of prepayment penalty.
All right. And do we have any other questions from our guests joining today? If not, that's actually our last question from our previously submitted questions. So we just want to invite you again to go to our landing page, submit those questions in this next week so that we're able to answer those this next Thursday. And Other than that, thank you everyone who submitted them. And oh, actually, we just got a question, and it is how do foreclosures work?
Okay, so a foreclosure is a home that's owned by the lender, I guess. It could be a bank or a mortgage company or whomever, where they extended a loan to someone, and for whatever reason, that person didn't make their payments, and so the foreclosure process is an attempt for the lender to recover some of their money that they may have lost during that transaction that went bad. So you'll see them come up for sale. The process is pretty similar to buying a traditionally listed home that a person is selling. You can run into some speed bumps where if there are repairs that need to be made to the home, typically they aren't very flexible on those kinds of things. And then the time can take a little bit longer just because, again, you're working with typically a pretty large company where when you submit an offer or in the negotiating process, it kind of has to go up the flagpole to whoever in the process needs to approve each piece of whatever it may be that you're working on. But the actual home buying process on our side, on the finance end, is no different than any other home purchase.
Would you encourage someone to go after a foreclosure then, or what hurdles is someone going to have to face?
The appeal is that they're usually less expensive because the owner who repossessed the home wants to get it off their books, try to get their money back quickly. So that's usually what draws people in. But like I said, they're usually abandoned. They can sit empty for a long time where there's no electricity or heat or anything else. So you don't know until pretty late in the game that if there's plumbing damage or things are leaking or whatever that may be. And like I said, they don't really work with you very often on getting those things fixed. So if you end up in that situation where you purchased the home and you discover them after the fact, if you don't have a significant amount of money laying around, it can be quite an issue if you don't have the resources to get those things repaired. So that's just something to keep in mind.
All right. Any other questions? Once again, we just want to remind you to submit those questions throughout this next week, and look out for us next Thursday at 2 p.m. Eastern Time. Thanks for joining us on Unboxed.
See you next week.
See you guys.